Hello, everyone. Good morning, good afternoon, good evening, wherever you are in the world. Thank you so much for joining us to the OECD Tax and Development Days for the session on carbon pricing and fossil fuel subsidy reform for sustainable development. So just to give you an idea of the agenda for today's session, so introducing myself, Asia Al-Gwassem, acting head of the Tax and Environment Unit at the Center of Tax Policy and Administration at the OECD, and joined with my colleague Astrid Tricot, who is one of the team members who's an expert on carbon pricing fossil fuel subsidy reform. And we will be giving you an introductory presentation going over OECD's work in this area and recent results from our latest publication, as well as discussing a newly launched initiative for looking at climate mitigation policies. After our introductory presentation, we will be joined by a panel of policymakers. Joining us is Thierry Watrine from the Ministry of Finance and Economic Planning of Rwanda, as well as Mohamed Ashour from the Ministry of Finance of Egypt, who will share with us their experiences with carbon pricing, fossil fuel subsidy reform, and a broader climate mitigation policy agenda. After the panel discussion, we'll open the floor to questions and answers from the audience. So feel free to post your questions in the chat, and we'll try our best to leave some time to address them. Please also make sure to address your questions to the appropriate speaker, whether it's me, Astrid, or Thierry, or Mohamed. So let me begin. So just to give you a little bit of the outline of my presentation today, I will provide you an overview of our work on carbon pricing and energy taxation, provide you with main results. We'll have a portion that is going to be presented by Astrid, focusing on developing and emerging economies. And then we'll have a little bit of a presentation of the Inclusive Forum on Carbon Mitigation Approaches. So just to set the scene a little bit here, what I wanted to show you here is that, in fact, in order to reach our net zero goals, what we see is the announced pledges thus far by countries that are currently number almost more than 130 countries, covering 85% of the world population, 90% of world GDP. Will not bring us to our net zero objective. And so there is a substantial ambition gap in what countries have put forward and what is needed for us to reach climate neutrality. And therefore, there is going to be a need to accelerate our efforts to make sure that the transition takes us to where we need to go. And in the climate mitigation policy toolbox, we know that there is a wide range of policy instruments that could be exploited. And actually, given that policy settings vary greatly across countries, reflecting complex interactions between countries' climate ambitions, pre-existing conditions, political constraints, and social preferences, there is a scope for countries to adopt a wide range of policies that are both explicitly introduced to reduce greenhouse gas emissions, but also policies that could be relevant for climate mitigations, but may not have the primary motivation to reduce emissions. And also we see that there are both market and non-market-based instruments. When I say market-based instruments, those are all the instruments that include carbon price-based instruments, non-market-based instruments such as standards, regulations, bans, for instance, on coal power plants, etc. So there is a variety of policies that could be deployed, and they each have their own merits and limitations, and therefore it's important to also harness the complementarities in the policy between policies when considering a policy mix. When it comes to carbon pricing, which is the focus of our presentation today, the OECD takes a broad approach that includes in the effective carbon rate that we put forward is the emissions pricing permit price. We also have a carbon tax. These are two policy instruments that have the intention to price emissions, but also we include fuel excise taxes because one, they are economically equivalent to a carbon tax because they levy a tax on a tax base that is proportional to fossil fuel use and therefore to CO2 emissions. And we also take into account fossil fuel subsidies, which translate into negative carbon prices. And in the end, we provide a net effective carbon rate that sums up all these different pricing instruments. And indeed, carbon pricing is a core climate policy, mitigation policy instrument for several countries. But again, we recognize that there are many other ways to address climate change, the climate change challenge. But when it comes to carbon pricing, the merits of carbon pricing lie with its effectiveness in reducing emissions, its cost effectiveness, so it's an economical way to reduce emissions because it exploits the least cost options for reducing emissions. It also steers investment and innovation towards clean energy. It creates fiscal space because it raises revenue for governments. And it has co-benefits in that it reduces or helps or contributes to reducing local air pollution, and also ensures long-term competitiveness of industries by lowering their abatement costs in the future. But of course, when implementing carbon pricing, it is important that the policy alignment is taken into consideration. For instance, introducing carbon pricing while there are fossil fuel or other support for fossil fuels in place can undermine its effectiveness. Then the latest publication that we put out there with data on that tracks how countries price their emissions. It's titled Pricing Greenhouse Gas Emissions, Turning Climate Targets into Climate Action. This publication tracks carbon prices, energy taxes, and subsidies across 71 economies between 2018 and 2021. These economies account for approximately 80% of global greenhouse gas emissions. We provide estimates of positive carbon prices. So as I mentioned before, including carbon taxes, emissions trading systems, fuel excise taxes, and the novelty in this publication is that we include a negative carbon price that results from fossil fuel subsidies. So what do we see in the data? We see that the coverage of carbon pricing has increased. So from 32% to about 41% of greenhouse gas emissions are covered in 2021. And this increase has been mostly driven by the expansion of or the introduction of emissions trading systems, primarily in Canada, Germany, and China. To a lesser extent, coverage has also increased due to reforms or introductions of carbon taxes. When it comes to prices, again, we see that the price increases, although moderate, have been driven mostly by these the changes in emissions trading systems. And but we see that unfortunately, effective carbon rates remain quite low. Breaking this up across sectors, just quickly, we see that fuel excise taxes are highest in the road transport sector, whereas carbon taxes and emissions trading permit prices are highest in industry and in electricity, followed by industry and buildings. What is interesting is to look at how different countries do this. So we see that net effective carbon rates diverge greatly across countries, where the highest rates are implemented mostly in European countries, and to a lesser extent in emerging economies in countries like the United States and Australia. And over time, the change is most notable in countries with the highest net effective carbon rates. So those countries that price their carbon highly have experienced the greatest increases, and those that have lower prices have had, carbon prices that are quite stable across time. And with this, I pass the floor to Astrid Tricot, who will give us more of a zoom in on developing countries and emerging economies.
Thank you, Asia. So our report covers 71 countries, and almost half of them are developing or emerging economies with so ODA eligible countries, with various range of economic development, as you can see. So the next slide. Okay, so these are the 34 countries which are covered by our report. And so now this question, so why should we focus on carbon pricing in developing and emerging economies? So because it is aligned with the 2030 agenda. So I will quote a few SDG. You have, of course, SDG 13 as carbon pricing is one of the tools to mitigate climate change. You also get co-benefits from it, such as pollution reduction. So it contributes to SDG 3 on health. It's also a way to reduce informality, so which refers to SDG 8, as it will be difficult even for informal workers or firms to avoid buying fuels to the formal sector. Another very important point is the signals that carbon price send to steer investment towards low carbon assets. And this can be especially relevant for some countries with few dirty legacy assets, which need finance to leapfrog to green industry. So we often quote the example of Africa for this, which is the continent closest to net zero. So there is a need here for finance, and we can see in this regard a growing interest for voluntary carbon markets. But of course, it's one tool among others, and you can also think to other policies like bans to highly emitting assets. And maybe one last SDG, of course, SDG 17, which relates to domestic revenue mobilization. So now, what are the results of the publication focusing on emerging and developing economies? So the first one is that, well, net effective carbon rates are lower for these countries, the unweighted average is around €8 per ton of CO2. But most importantly, you can see that the structure differ because developing and emerging economies tend to rely more on fuel excise and also to have more subsidies. But it is an evolving landscape. As you can see, when we compare the two latest years in our database, 2018 and 2021, some countries already undertook major reforms. And we can quote, for instance, Philippines, which increased fuel excise tax rates over several years. And also Egypt, who phased out fossil fuel subsidies, and you will hear more about this later during this session. And maybe one last thing, it is worth noticing that our figures are in real euro, so some changes, especially some decrease, may be due to exchange rates fluctuation or domestic inflation. And it's still evolving, and over the past year and for the coming year, you can see that several countries have interest for explicit carbon pricing. So several countries intend to implement carbon tax or ETS, such as Uruguay, Indonesia, or pilot ETS in Colombia, Mexico, and Ukraine. So this should be covered in our next publication. And we can also notice a lot of interesting initiatives regarding voluntary carbon markets. So now, one other very interesting result from our report is about revenue potential, which vary widely across countries. So there are two main factors behind this variation. The first one is due to pre-existing tax rates, because the lower they will be, the more you can expect to rise revenues. So that's why, as you can see, for middle-income countries, revenue potential is much higher than for OECD countries. And another key factor is the carbon intensity in terms of GDP. Because if the carbon intensity is lower, your tax base will be lower, and so your revenue potential. And that's one of the explanation why you have also a higher revenue potential for middle-income countries compared to LDCs. And now, one final question before ending this section on developing and emerging economies. Is it difficult to price carbon if you want to implement a reform? So almost all countries in the world have already in place fuel excise taxes. And it can be quite simple to convert them into carbon taxes if you rely on the carbon content for each fuels to adjust the tax rates. So because you have a direct relation between the carbon, the fuel burnt and the emissions generated. So for instance, if you want to put a price of €30 per ton of CO2, this will translate into approximately 7 eurocents per liter of gasoline. And just to on this section, when you speak about such carbon pricing reform, there are several facts that you need to have in mind. So the first one is that policymakers should take into consideration the distributional impact if the taxes have a lot of regressive impact or affect energy affordability. Also, it's better to implement reforms gradually so consumers can adapt. So for instance, begin by phasing out fossil fuel subsidies and then increase progressively the fuel excise tax rates. And finally, one important thing is about revenue recycling. So governments may want to allocate them to some priorities, social or economic priorities, or to focus on vulnerable groups, which will be hit by the price rise. So, thank you.
And so thank you, Astrid. And I mean, as I just want to recap a little bit, and we see that in fact there are quite a lot of differences with across countries on how they price their carbon. Did you mute? Sorry, Astrid, mute maybe. And this is really reflective of not only the appetite within a country to price their carbon emissions, but also the fact that countries deploy different climate mitigation approaches to reach their climate goals, and to this end, we saw that there was a need to bring all of this into to one place, and therefore the OECD has launched the Inclusive Forum on Carbon Mitigation Approaches. And this is a recently launched initiative. And the thinking behind that is that there is a need to raise ambition in the world and for emissions reductions. And this can be done through better data and information sharing, through evidence-based mutual learning and inclusive multilateral dialogue. So this IFCMA, as we call it, is a platform that will allow countries, both OECD and non-OECD countries, to share information, to learn from each other, and to collect data in a comprehensive, complete, and coherent way, and analyze the effects of policies on emissions reductions. So our first meeting took place from the 9th and 10th of February 2023, so very recently. It brought together 607 senior officials from 103 countries. These countries cover more than 90% of global GDP and 85% of global greenhouse gas emissions, and included also were 9 international organizations. The IFCMA comprises 2 different modules. The first module being a stock taking of climate policy and climate relevant policy instruments, and mapping these policy instruments to their emissions base to understand to what extent these instruments cover their respective emissions. Sorry, my my arrows are functioning on their own today. And the second module of the IFCMA is to estimate the effects of these policy instruments on greenhouse gas emissions. So the scope of the exercise here is to take into account the diversity of climate mitigation approaches, and both those that are market-based instruments, so thinking about subsidies for green technologies, tax incentives for green technologies, for instance, carbon price-based instruments such as carbon taxes, ETS, and fossil fuel subsidies, but also tax incentives, for instance, for innovation, feed-in tariffs, etc. On the non-market-based instruments side, these are all those instruments that are of a regulatory nature, standards, technology and performance standards, for instance, but also direct government interventions such as investment in low carbon infrastructure, among others. So the stock taking and the mapping of policy instruments, as well as the analysis of their effects, is going to span a wide range of climate mitigation instruments. And the analysis is going to provide model-based instruments, mostly coming from ex-ante tools, so models such as sectoral models and computable general equilibrium models, that could also be informed through econometric work that estimates, some elasticities, and these could be used as inputs to this work. And the modeling or the effects analysis will be comprised of two steps. First, starting with granular bottom-up partial equilibrium models that cover sectoral detail in fine resolution, and then these would be connected to more of the CG type models to take into account second order effects. This would be with a view to 2030, and it will cover all greenhouse gas emissions. I just want to draw your attention to our global relations program that provides training on environmental taxation and other tax topics. We have a link here to our latest live webinars on carbon taxation and also other topics. And of course, we thank our donors for their continued support, and that allows us to do this very interesting work. And with this, I conclude our presentation, and we can go to our next session. And this is our panel discussion. We'll stop sharing my screen right now. And so joining us in the panel, as I mentioned, is going to be Thierry Watrine. I hope I'm pronouncing the last name correctly, who is the Green Economy and Climate Change Advisor to the Minister of State in charge of economic planning for the Ministry of Finance and Economic Planning of Rwanda. In this capacity, he contributes to the strategic development of a national green economy, specifically working on the transition to a decarbonized, sustainable, and socially responsible economy. Joining Thierry is Mohamed Ashour, who is currently a senior economist in the Ministry of Finance of Egypt since August 2017, and is an experienced economist, financial analyst with over 12 years of experience spread across public policy, equity research, commodities, and budgeting. And I guess we can start our panel discussion. Hello, Thierry and Mohamed. So starting with Mohamed, Egypt has undergone, yes? So I'm just, yes, so Egypt has undergone an important fossil fuel subsidy reform that has not only increased its effective carbon rates, but also created the much needed fiscal space and macroeconomic stability for Egypt. And so could you please walk us through your country's journey in increasing its fossil fuel prices and discuss maybe the main challenges and main factors for success along this transition. So with that, I open the floor to you, Mohamed.
Okay, good afternoon, everyone. Thank you, Asia, for giving me the chance to do this presentation. Thank you, everyone. It's a pleasure to join Thierry on this panel. I'll be sharing some slides with you, and I'll take you through our journey here in Egypt and how we tackled the energy subsidy reform since the end of 2016 till now. So I'll try to show the picture from 2016 till now and the image before that. So I'll be sharing my screen just a moment. Yeah, so you can see the slides, right, everyone? Okay. Okay, perfect. So first of all, this first slide shows the the pricing of two products of the petroleum products in Egypt, the diesel, or we call it in Arabic solar, and the gasoline. The gasoline, which includes, this is the average price for the gasoline, 92, the 80, the 95 octane. So in 2014, as you all can see, Egypt, among the developing countries, was suffering from underpricing. So the price of diesel, for instance, the price of liter of the diesel in dollars was $0.25, which was among the lowest, not only among the developed countries, but the developing countries. As you can see, the sample in front of you, like countries like Turkey, Morocco, Pakistan, Bangladesh. So Egypt was very cheap, the price of the diesel, underpriced. The same goes for the gasoline. If you look at the gasoline. So what this has led to, this has created wrong incentives in the market. It's led to overconsumption of the energy in Egypt, as well as underinvestment in the energy sector as percentage of GDP. So as you can see, the investments in energy sector kept on declining from 6.4 in 2010 till nearly 3%. So gone down by half the amount in 2014, 2015, which was directly before we embarked our journey in the end of 2016, beginning of 2017, with the EFF program of the IMF, when one of the major pillars was the energy subsidy reforms. Next slide. So what we have done actually is presented in this slide, and I'll talk about it briefly. The energy subsidy reform program was designed and implemented through four main pillars. First pillar was reaching the cost recovery through implementing ad hoc changes in the prices by increasing the price to match the cost over a period of time from the end of 2016 till 2019 in order to address any distortions, any underpricing. The second pillar was by the introduction of the fuel indexation or the automatic price adjustment mechanisms for all the products we had on board. So the gasoline, the diesel, the fuel oil. The only things or the products that were excluded were the LPG bottles and fuel oil for bakeries and electricity. So fuel oil for industries was in the indexation, but only those two products, the LPG and the fuel oil for bakeries and the electricity, to address the social aspects, and as these products cater for the most vulnerable or the poor or the poorest. Third pillar was implementing the hedging, the Brent hedging through. So the Ministry of Finance of Egypt started implementing its hedging program starting from the fiscal year 18-19 up till now by buying call options in the financial markets, call spreads to safeguard the budget, and as and to complement as well the fuel indexation mechanism, which was at the place because it had a ceiling 10% up or down. So above that, to safeguard the budget, we introduced as well a complementary tool, which was the hedging. Fourth pillar was resolving any financial entanglements between the Ministry of Finance in Egypt and the Ministry of Petroleum. There were historical financial entanglements that has been there for a long time between both ministries and as well as the Ministry of Electricity. So all of this was cleared, resolved, and this provided more breathing space in terms of liquidity for the EGPC, which is the Egyptian Petroleum Company, and the Ministry of Petroleum and the oil and gas sector as a whole. As you can see here is like a sample of what we have done. So we've increased the fuel prices. For example, the diesel from one pound in May 2014 it reached 6.75 LE per liter in July 2019, and now even it's more. So this is not the latest price, but it's in 2019. Gasoline the same, from £1 to 6.75. The 80 gasoline 92 from 1.85 to 8 pounds. All of this to reach the cost recovery, as you can see in the chart on the right hand side, which increased from 44% in November 2016 to nearly to 100% in June 2019, and after that, through the automatic pricing adjustment mechanisms, we were able to maintain it around the 100% level. Yeah, here this slide basically just highlights how we were managing the fiscal risks from the energy price fluctuations in the Ministry of Finance, basically through both tools that I mentioned, the automatic price adjustment mechanisms, the hedging. The automatic price adjustment mechanism is implemented on a quarterly basis. So each quarter we look at the prices, we see through mainly two variables, the Brent and the exchange rate, which makes 80 to 85% of the formula. The remaining 15 to 20% is a fixed cost that is revised every year, which include all the other administrative costs, things related to inflation, whatever. And the cap that I mentioned, which is 10% up or down, which has been put there to safeguard as well the people from any huge fluctuations that can happen, in addition to the hedging that has been put in place to complement this. Next, as a result of this, in the coming slides, I will show how this improved or how this has led to improvement on the fiscal, external, and sectoral fronts. First, if we look at the fiscal front, so on the left-hand side, you will see that before the reforms, there was a large fiscal deficit. The overall deficit kept on increasing from 8.5 to 10 till it had reached 16.7 in 2013-2014. Energy subsidies as well increased from 5.5 to around 7% in 2013-2014. On the right-hand side, after the implementation, we started implementing the energy subsidy reform, you'll see the opposite. All the dark red colored bars, which represent the overall deficit, decreased from 12% to 8% in 1920, which is the last year in the time series. As well, as you can see, the energy subsidies as percentage of GDP declined from the 6% and the 7% to less than 1%, which was a huge progress. As well, if we look down on the external sector, so on the left-hand side, things before the reform, the petroleum trade balance within the current account, we went from a country which has a surplus in its petroleum trade balance, which has the summation of the oil and the gas. So from a surplus into 2009, 2010 to a huge deficit in 2014-2015, and then this deficit increased until we started implementing, as you see on the right-hand side, the reform. So after 2016-17, you'll see that things started to decline until things were offset, and we started to see a small surplus even in 2019-2020. In the next slide as well, we can see the effect of this on the IOC arrears, International Oil Company arrears. So the arrears increased before as well implementing all of these reforms from less than $1 billion to around $6 billion USD, $6 billion. And as you can see, this affected, if we go back to the slide and the beginning, just to show you something, sorry, it's moving. If you go back here, you see how this affected the investments in the energy sector as a percentage of GDP. So because of the arrears, we were not paying the money to the international oil companies. Nobody was willing to come and invest to do more exploration. So as you can see here, back to this slide, the arrears kept on increasing till nearly 6 billion. And then after we started implementing the reforms, introducing the indexation, pricing the products fairly, the arrears declined till it reached less than 1 billion again by 2019 to 2020. As well, if we go down, we see the effect of this on the natural gas production declined before the reform, then increased again because nobody was investing. The IOCs were exiting the country. So left-hand side shows the things before reform. After reform, things started to normalize and to be better even. Next slide. The energy subsidies we can see on the left as a percentage of the total expenditures in the budget. They were around 20% before when the subsidies were there, before phasing out the subsidies. After gradually removing the subsidies and introducing the fuel indexation, the 20% came down to less than 2%. Maybe now just it might increase a bit to like 3% like last year, like in 21-22, because of the effect of the Ukraine and Russia conflict on both products. Because as I mentioned earlier, we have phased out all the subsidies except for the LPG bottles and the fuel oil for the bakeries and the electricity. So the cost of the LPG bottles for sure has been affected. It has gone, the subsidies on it has gone a bit up due to the conflict. As well, here we see the effect, the same thing on the debt to the total budget sector debt as percentage of GDP. It declined as we started implementing the reform, like whether the energy reform or even the macroeconomic stabilization program. So from like more than 100% to decline back to the 80s area. The international reserves as well, same thing. They were affected because of this and other, for sure, variables. The month of imports on the left-hand side, they kept on declining from 35 billion USD dollars to like 17.5 in 2015, 2016, and then they recovered back again until they reached the 40 billion USD in March 2021. The coming slides show how the reform and how under right incentives, the consumption as well has been was being rationalized. So as you can see on the left hand side, the gasoline and diesel consumption growth. So the years before the reform, it was always growing up, increasing. So for instance, the diesel kept on growing 6% and then 6.6 in 2015, 2016, gasoline 7.7 to 8.6. And after pricing the products properly, the consumption, the growth actually declined in the negative territory because the products were fairly priced. So people were more rational in their consumption. The effect of this as well on the relation with the budget, because as some of you might know, the relation in the Egyptian budget, I mean, within the Egyptian government budget with the petroleum sector through the net relation with EGPC, which is the Egyptian Petroleum Company, which is an economic authority. So any economic authority under the budget should be generating actually revenue to the state budget. But what was happening because of the underpricing and the subsidies that were there, that the net relation was a negative, which meant, as you can see in 2016, 2017, for instance, which meant that the budget or the government was subsidizing EGPC, so it was giving it more money that it was taking from it. So the net relation, simply the revenues minus the subsidies. The subsidies were higher than any revenues we were getting from EGPC. This was corrected after the reform was implemented, after the prices of the products were fairly priced, as you can see, and it went back to the positive territory till it reached nearly 44 billion EGP in 2019, 2020. And finally, here the fiscal space that was created. As we can see on the left-hand side, expenditure on the education and health was around 110 nearly in 2013, 2014 versus 140 nearly billion on the energy subsidies. So the energy subsidies, which is the petroleum and electricity, were more than the money spent on education and health. On the right hand side, we see the huge difference after the reforms were implemented. All of this money were reallocated to the education and health sector in 19 in fiscal as of 19 fiscal year 2019 2020. As well, in addition, more opening the government tried to open the energy markets to private sector. For instance, new law was implemented for a regulatory body. So an electricity regulator was established, a natural gas regulator was established, liberalization for the products took place. All of this has supported and enhanced the story of the reform. Yeah, and that's it. Thank you very much.
Thank you, Mohammed, for this very, very informative presentation. I mean, it's very impressive to see how comprehensive the reform is and all the steps that it took to really put in place the reforms and reap the benefits. I mean, from establishing cost recovery to having this automatic price adjustment, at the same time trying to reduce volatility, so putting in place hedging, and also, which sometimes a forgotten element, but having this resolving the financial entanglement between the Ministry of Finance and the Ministry of Petroleum, and sorting out the finances for the state-owned enterprise is a very important aspect of a reform. So it's very good to see that. It's also very good to see how fiscal space was gained in order to fund social programs and to invest in healthcare and education. And it seems that things are really going in the right direction there. But in the interest of time, I mean, I have a lot of questions, and I'm sure the audience does too, but I would like to go to Thierry and discuss a little bit of the state of affairs in Rwanda. What we have seen is that the main policy tool for carbon pricing in Rwanda is indeed a fuel excise taxation, which is pretty common, especially in developing countries, but not only. But at the same time, there have been very important recent developments in Rwanda that could be of interest to us. So could you please share with us the recent efforts in Rwanda to price its emissions and challenges, if any, that have arisen along the way? Also, if you could tell us more about prospects for implementing further carbon pricing policy reform in Rwanda and how this fits in its overall climate mitigation strategy. So the floor is yours, Thierry.
Thank you, Asia. Can you hear me properly? Yes, thumb up. Yeah, thank you, Mohamed, as well, for the great presentation for Egypt. So here in Rwanda, we're still at an early stage and looking at different possibilities. So I will not share with you any special PowerPoints, but I'll be talking about our journey, basically as a developing country. So environmental taxes are on the agenda of most of the developing countries. So as you said, and as Astrid said, for both revenue purposes, but as well to meet our country commitments to climate change. And Rwanda engaged in 2022 as part of his nationally determined contributions to reduce the global GHG emissions by 38%. With the target date of 2030. So we see the carbon tax as a way of achieving as well our climate country goal. So carbon tax is one of the evident policy measures, the pricing mechanism that's related to it, that countries and especially developing countries can use to help fight climate change and incentivize sustainability. One other advantage that we see as a country of Rwanda is that to administer carbon tax, it has low compliance costs and it limits informality and evasion. And I'm sure that the OECD is quite familiar with that. Just to give you to provide you with some context about Rwanda. So in 2008, we launched the Global Green Growth Climate Resilience Strategy, which had the goal of reducing and developing a green economy. So it was 15 years ago. And in the meantime, Rwanda has been championing the green agenda. So you have the climate, which is mainstream in all the national programs. I believe we've been talking before about the green public financial management or the green budgeting. And the approach in Rwanda is holistic. Mitigation is designed to reduce emission, and adaptation is designed to increase resilience. And all the programs are achieving the sustainable development goals. And I believe Astrid was talking about the intersection between the sustainable development goals and the carbon tax. So in Rwanda, implementing the nationally determined contribution requires an average spending of 8.8% of the country's GDP each year through 2030, which is quite a bold ambition. And you can see where we'll be heading, that the carbon tax could have a real, could be a game changer as part of the potential resource mobilization to implement the NDCs. So currently the state of carbon taxation in Rwanda is that we are taxing three main products: diesels, fuel oil, and gasoline. So we're talking about those excise duty. It's exactly that. And on the contrary, we have what we would call a negative carbon tax price on electricity, which is actually a subsidy. You have a subsidy on electricity and on distribution losses. In terms of policies as well in Rwanda, since 2019 and effective 2020, we're one of the unique countries to not tax electric vehicles and batteries. So it means that when you import an electric vehicle or a battery, you don't have any import tax, excise tax, or VAT, which is kind of rare and a bit courageous as well, because we were the first one to do it. So the goal was to encourage the private sector as well, because we didn't want to lead as a government only, but to incentivize the private sector. Currently in 2023, we're looking into the potential to implement a carbon tax in Rwanda. So we still have the other carbon products which are not yet taxed, such as biomass, charcoal, coal, LPG, nat gas, peat. And we could have the renewable resources that we could directly subsidize. We're still into looking into the in and outs and the possibilities to calibrate the potential of such a policy. And according to the World Bank's, Rwanda's World Bank's Country Climate Development Report of October 2022, using increased global taxation as the only source of financing climate would not only increase poverty, but also have a much larger negative effects across the consumption distribution. And so as a developing country in Rwanda, we need to be careful about really thinking twice before implementing a carbon tax on the policy side. And as well, clarity on the carbon regulation and taxation will help provide certainty for the private sector and investors, which is something that we are looking into in Rwanda.
Thank you, Thierry, very much for giving us this overview of Rwanda's climate mitigation policy agenda and carbon pricing. I guess I have a couple of questions, or I guess the same question for both of you, Mohammed and Rwanda. I think implementing carbon pricing or fossil fuel subsidy reform is not easy, and it has could face quite a bit of resistance. And it would be good to hear from both of you what challenges your countries have faced when it comes to implementing climate mitigation policy, and how that was resolved. I know that I don't know, Mohammed, if you're still with us, but for instance, in Egypt, I know the reform has been accompanied by substantial social programs, etc. And so if you could tell us a little bit about that, and Thierry as well. Thank you.
Okay, thank you very much, Asia. Yes, implementing this was challenging. And the key here is always the communication strategy, to have a strong communication strategy with the public through the media platforms, whether the traditional media platforms, the social media platforms, using infographics, data to show the people like where the money that, I mean, if you are going, okay, to increase the prices of the products, where is it going to go? That is going to go to, for instance, the education and health and all of the things that are important to the people. One other thing is the timing of the implementation. So usually best timing to implement such a thing is when the environment in the commodities market or in the energy market, when the prices are declining, it's a good chance to implement this, and it's easier to introduce it to the people than when, for instance, like when what we were witnessing last year in the markets, when the price of the barrel of the Brent exceeded the 120. So it will be very difficult to implement it gradually, to increase the frequency of the indexation gradually. So maybe start by a quarterly basis frequency, or even a semi-annual, then increase it maybe as you go to a monthly or whatever. You can put a cap. All of these are some ideas, as well as complement this with social programs. So we were Egypt have this programs like Takaful and Karama that actually is targeted to the most vulnerable households who fit certain criteria. So the money that we saved from these reforms, it goes there, and as well as highlighting that the energy subsidy reforms, as in the literature and as everybody knows, it serves more the rich than the most vulnerable, because it's accessible usually to everyone, to people who drive cars more. So things like these. Thank you.
Thierry, would you like to comment? Thank you.
Yeah, absolutely. So I totally agree with what Mohamed has been saying. It's about the social impacts, where we need to be very careful, because the carbon tax, once you go with it, you cannot revert back, right? You could have some social movement that could last and have dire consequences. So we need to make the case, I think, not to think only as policymakers, but more as economists. And so as actually Astrid was saying, carbon pricing is aligned with the SDG 2030 agenda. And in Rwanda, as a developing country, we really need to make the case on how it benefits or co-benefits to the SDGs. So for example, Astrid was talking about the SDG 3, good health and well-being, and the SDG 17 for increased resource mobilization. So the goal would be to make the case and to be able to report, for example, the social benefits on those SDGs, SDG 3, SDG 17, of the carbon tax. Could be something that could be interesting to work with different partners, but to be able to quantify the positive impact and the benefits of the carbon price or taxation on the SDGs. And for example, in Rwanda, I'll give you a concrete example. As an indirect consequences of removing the carbon tax, of removing the taxation on electric vehicles, you have the case for motos, because people tend to use motos a lot, and the tax exemption on electric vehicles makes it affordable for the moto drivers. So you have a real social incentive for the people. Based on the OECD report that you launched lately, pricing greenhouse gases emissions, where you analyze the different economies. I think what was interesting as well is the new indicator that you call the net effective rate, which consisted of 3 components: the explicit carbon pricing results from emission trading system, the fuel excise taxes, and the fossil fuel support. So what we see in your report is that the effective carbon rate increase from 14 euros per ton of CO2 to around 17 euros of tons of CO2. And it's mainly due to the increase in emission trading systems prices. So what we need as well, and there are differences actually, what I mean that you have differences between emissions from large emitting countries who has relatively low net effective carbon rates, whereas smaller countries tend to have a higher net effective rates. Whereas you have the emerging countries who are more with subsidies that result in negative effective rates. And so what we need to do is something that's really calibrated for our countries, and all the countries have different needs, be it Egypt or Rwanda or any other developing or emerging countries. And the reasoning really needs to be focused and centered on the people, because as per nature, the carbon tax could be challenged socially. So that's my point. And about the opportunities, there is the smart investment with the carbon tax. So for example, with the carbon tax, the investment comes back in the budget, right? And the state, Rwanda, can use it as an effective way to invest as a share of the GDP. The investment as a share of the GDP. So the gross fixed capital formation would be bigger, right? And the rise in fixed capital formation could be quite remarkable. If you look in Rwanda, it was 27%, the investment to GDP ratio, from 12% in 2000. And so using the carbon tax could help really have this centralized and very effective way of using investments. As well, I think in the second time, it will be very important to coordinate at a global level. And I think it's really interesting that you guys launched the Inclusive Forum on Carbon Mitigation Approaches, the IFCMA, just to coordinate at a global level, and to be sure that you don't have one country that goes with a precise idea of the carbon tax and another that's not aligned, to really come with a global approach to a global problem. And since the stringency of mitigation action rises, the need for countries, not only sub-Saharan or African, but all the countries, to enter into a coordinated policy dialogue has become greater. So at the moment, the collection strategy will be important, I think, and it's really great that the OECD is leading on that. And it will be helpful to measure the effectiveness of the different policies across different countries. I'm done.
Well done, Thierry. I think, well, to both of you, and Thierry for actually making good closing remarks for me. In the interest of time, I think we're a little bit over our allocated time. So I want to thank very much Mohamed and Thierry and Astrid for making the discussion very, very interesting. And indeed, as you said, making the case for carbon pricing has to include social environmental considerations, and therefore making the case for it with making a stronger link with the SDGs could help in this direction. There is also the Inclusive Forum on Climate Mitigation Approaches that recognizes the different circumstances of countries and tries to open up the scope of climate mitigation approaches to a diverse range of policy approaches, as we know, because countries differ in their circumstances, and therefore we need to be inclusive. And so please continue to follow this work as it's going to have, a comprehensive and complete and coherent stock take of policy instruments from a wide range of countries, and also this analysis of their effectiveness, which will be very informative. And with that, I thank you everyone for your time and for attending our session. Please don't hesitate to reach out for further information and check out our resources on the subject. Thank you, and I wish you a good rest of the day. Bye, everyone. Thank you.
Thank you.
Bye.